Today is brought to you by Silvercrest Opportunity Fund. All right, so we're wrapping out the day here with Mobile Mailbox Money, Silvercrest Opportunity Fund, and Win Mobile Homes, where we help capital investors hedge their bets in affordable housing. Did you know affordable housing is a state of emergency, not only here in Arizona, but also across the nation? Quick capital check. We're paying off an investor $65,000 tomorrow, where he earned a monthly payment of $650 a month in first lien position on an affordable home here in the Valley. That was a cash flowing program, not only providing him a collateralized lending opportunity, but also a double-digit interest rate and income paid monthly, backed by an asset with no complications of landlord and tenant. Virtually no other opportunity, providing a yield and monthly cash flow and first lien position. Really tough to find out in the market. It happens to be in manufactured housing. Who are the other players in manufactured housing? Well, Warren Buffett has taken one of the biggest stakes and bets by owning Clayton and Cavco, two of the largest manufacturers of mobile homes, as well as 21st Mortgage, who takes the long-term note hedging in personal property chattel mortgages. Why? Well, the yield is higher than traditional real estate investment strategies, and it's a niche market. The riches are in the niches at the end of the day. For the individuals that have been watching for the past couple years, know that majority of our transactions have been personal property lien positioning. Well, I'm happy to bring in the conversation of real property residential lien positioning on single family bailout loans, which happens to be second lien positions. You hear people talk about seconds and to stay away from second lien positions. It depends. If you validate the first and it provides sufficient equity cushion for a risk mitigated program, and it's a high yield, we're talking, double digit interest, why not look at the opportunity? So tomorrow at 12 o'clock Arizona time is our mastermind. It's on Zoom. The link's below. Feel free to join, learn to raise private capital, learn to do deals in affordable housing, and learn about second liens and the opportunities that we have case specific in bailout loan programs. What's a bailout loan? That's a collateralized loan based on equity an individual has in their property, where they may have fallen out of falling on hardship. They may have credit card debt that needs to get refinanced. They may be behind on their mortgage payments, and don't want to sell. They may have a 3% mortgage. Whoa, that's like gold out in the current market. You see Pace Morby operating at an institutional level, acquiring hundreds of millions of dollars of real estate using creative financing and acquiring a home via the 3% mortgage and actually transferring that interest into the investor's name. That's us, people. So real property collateral lien positioning will be debuting tomorrow. Why is that an opportunity for an individual currently? Well, it provides you a collateralized lending opportunity, a double-digit interest rate for terms as low as 1 year, where you participate with a qualified operator via hypothecation, which means to pledge an asset in order to get garnished capital investment. Currently, we're doing that on a per note basis, which happens to provide a non-accredited investor the availability to have one investor on one note with our partnership that we have. So you would ultimately be a lender with our partners, us, Win Mobile Homes, or Silvercrest Opportunity Fund, and our associates in the major markets operating like 50 flips at a time right now. And that's Jason and Todd. Shout out to them and be happy to introduce you to them. But they're running huge scale fix and flip programs, and they get case unique deals. And it provides you the availability to hedge your bet with a qualified operator and a team of highly trained and intelligent specialists. in niche market lien positioning, and risk mitigation. What's the risk within a second lien position? Well, if that buyer goes non-performing and the bank forecloses, it presents a challenge to try to recapitalize your position. Well, if you come in contact with that homeowner in the right conversation up front, having that conversation of, hey, if you go non-performing, we need to ultimately step in and either form a joint venture with that homeowner, or we exert our interest on that individual and help them sell the home before anything ends up happening. So before foreclosure, before our position is subject to being wiped out, we have that upfront conversation to mitigate the risk with the homeowner, that in intimate knowledge, as we receive payments, if we stop receiving payments, we immediately initialize contact with that homeowner, as we've had previous conversation of, hey, if you fall behind for whatever reason, we need to sell the house. And at 65% loan to value, there's the cushion on the cake, okay? With the new debt in the second lien position, it does not exceed 65% loan to value. So there's still 35% loan to value in cushion provided of equity in the property to recapitalize and recapture possibly some additional profit on the back end on the flip. So most people say stay away from seconds. It depends, right? Depends if you're just buying the second and you're relatively unintelligent. It depends on if this is your first note. It depends on if you have a fix and flip strategy already in the back end. Because actually in these properties, now that I mention it, we come into them trying to buy those homes and flip them, but they don't want to sell. They'll just go to foreclosure instead of selling the property. They're hard up. They're maybe old school, maybe not. But long story short, these people don't want to sell the house. They want to stay in their home. And that's what creates really an emotional satisfaction for us, because we're helping people keep homes, keep home ownership, live in their home, and provide cushion for our capital investors in a collateralized lending opportunity based on hypothecation or coming soon in the fund. So currently we're offering 10% returns for a 1-year term or 12% for 3 in our 506C accredited investment fund. And that's a set it and forget it program. But if you're non-accredited, we could go on a per note basis and help you participate outside the stock market in contractually agreed upon returns, cash flowing like Warren Buffett and even Pace Morby now. So we're replicating an institutional investment program for the people that are scared on the sideline because of uncertainty, market volatility, worries in fluctuations in single family pricing, seeing hardship in multifamily investment programs. This is it. The treasure trove at the end of the rainbow, and providing collateral-based performing assets to participate in a cash flow program and an income-oriented investment strategy, monthly income. Okay, there's no fluctuations. You're a lender, becoming the bank. So I teach investors to become the bank and receive contractually agreed upon returns. Long story short, so if you don't see stuff you like on our website, feel free to go out today at 602-888-CASH. Join our mastermind tomorrow at 12 o'clock Arizona time. I'm paying off an investor $65K tomorrow. We've done $250,000 in note transactions over the past week, I think it was. And have 25 homes in inventory. Our partners have 50, so that's upwards of 100 doors right there. If you know a high net worth investor, or really just yourself looking for stability outside the stock market and low yield return on investment, now's your chance. Join our mastermind tomorrow. Check out the note below, the featured note, paying $1,500 a month at $124,500. That's a first lien position in the major market of Tempe, Arizona. $15,000 a year with no banks, no landlord and tenant, no maintenance, management, insurance, and that's a asset that you could buy for a term as low as 1 year at a negotiated rate. So at a 124.5, you could make $1,200 a month for a 1 year term. or make the full monthly payment for the 20-year amortized schedule at 124.5. To replicate that in a residential property, is super challenging, as your out-of-pocket expenses is going to be at least $125,000. Your cash flow is probably net a month, a couple $100 a month, and you're still having to pay the bank and manage and property insurance, taxes, maintenance. By the time you get to the end of the year, you're making 3 to 4%, and plateau depreciation, people, is currently in effect. People are uneasy. Jerome Powell hadn't reduced interest rates like people thought they were at the end of the day. So, now maybe an opportunity for you to view the assets that we have available and collateralized lending opportunities here in the Arizona market and a few others as well. So I appreciate you all viewing this evening stream. Join the mastermind tomorrow. And that's what we call mobile mailbox money.